Good morning, traders. It's 8:05 a.m. Chicago time on Thursday, the 13th of October, 2016. Sorry about the delay in starting. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The overnight news is dominated by um, more um, events out of Deutsche Bank. They're freezing hiring. The situation looks fairly bad in there. Also, China's exports tumbled. Exports tumbled 10% in September, causing China's trade surplus to narrow to 41.99 billion, the smallest since March. And then, of course, there's a court case against Brexit. Um, a fund is suing the UK about the move, and Italy's not going to back up the world's oldest bank, Banca Monte dei Paschi. And that's really it. That's really that's what I see as a driver this morning. Not much else going on as far as what's on deck. I lost my screen here. As far as what's on deck for today, we did get initial jobless claims and import prices, non-events. We get EIA natural gas storage change at 10:30 Eastern, expecting 83. And then today we get the crude oil inventories, distillates, and gasoline, expecting 1.75 million barrels for crude oil, negative 1.1 million for distillates and gasoline, expecting negative 975,000 barrels. And then we have Fed Speaker Harker at 12:15. Um, at 12:15, so we have Fed Harker speaking on economic outlook. Uh, Overall, the market that's still tentative and somewhat scared, in my opinion, and so we continue to see money moving towards safety. The stance of the market overnight is that of being risk averse. Money's moving to safety. The Euro Stoxx is down the most, down 1.53%. The DAX is down 1.34%, down 141 points. Followed by the Russell, the Nasdaq, the S&P, Dow, and the U.S. dollar. The strength today is in the Japanese yen and the U.S. Treasury bond, followed by gold. So clearly, the market participants are moving to safety here. Let's take a look at what we expected yesterday. Yesterday, I talked a fair amount about what is likely to happen the day after a big sell-off. And I talked about the strong potential for a push up before any movement down. I showed examples in the past where the market drops and it takes back its sell-off, and that was a caution. There was a potential for that. Yesterday was a typical rest day after selling. And we saw what looked like a very weak close in the S5 chat room yesterday. I posted on the close that I strongly expect the market to continue to move lower, and it looks like it did overnight. We continue to push lower. So the primary hypothesis yesterday was for a push up towards the 34.75 point of control, and then eventually I expected sellers to come back in and push this down into eventually into the prior day's low. That did not happen. We did push up, but it was a fairly sluggish trade despite the FOMC release. The secondary hypothesis, a sideways open, which we didn't get, a push lower, find a base, and then start to turn up and aim for about 37.75, the 37.75 and the 39.75 area, the prior day's point, IB low. Not seeing charts. You should be able to see my charts. Anyway, this is this is somewhat of what we got yesterday. Here's what actually happened. This is yesterday's trade. So we got a nice opening swing, a very clear opening swing, a low and a high put in early. The market pushed lower, just like we saw with Hypo 2, and then it turned up and it tested 37.75, like I just mentioned, and ultimately um, ended up pushing to 39.50, the prior day's IB low, and there's the key LVN right behind it, and that's the expected area of support. But then after the FOMC minutes, it rolled over and pushed right back into the OS. This looked very weak. A small local double bottom there, pushing through mid, and it looked like it was starting to squeeze below, and the expectations for it to continue lower. Let's look at the overnight. The overnight session had a fair amount of selling. A better way to view this, and by the way, we'll go through this a lot today in today's webinar at 4:30 Eastern. If we look at what we've got from the overnight session, we see that essentially from the open, here's the reopen at 5 o'clock Central. From the reopen, the market pushed up, and we get these big red dots all the way down. Some really big ones right there, pushing lower. Sellers basically dominating dominating the move down with very little support. So when we scroll back in time, we see that a lot of these pie charts are dominated by selling, as you see there and there. This is the kind of detail that I'm going to talk about in today's webinar. But overall, the market it thickens up at the European. You can see that bids and offers start to come in. It becomes wider over time. As the European market opens, the European cash open is right here. And then overall, the market has been quite heavy this morning. With every push up, we see some selling coming in. As you see in in these dots here, we've got a fair amount of selling still. So it would appear to me that the overall stance for the market is to continue to sell. Initially, I'm sorry, my throat's still scratchy from last week. Initially, the expectation this morning, we've had an impulsive move. We've had the pullback and rotation. We've had an extension. We have an extension lower to 21.1350, and what it looks like it's doing now, it seems to be corrective. And initially, the expectation off of the overnight session, if it holds above this 21.18 even, into the open, the expectation is for responsive buying. So if we look at this on our big chart, the expectation this morning is for an open, not an open auction. We're opening out of the prior day's range. We have a gap below. We have a gap zone above. The key figure that we have to look at is September's low. That is the monthly low at 21.1050. I will caution you, we're entering into this low volume node zone. Let me scroll up to show you that. Here it is. The low volume node was tagged overnight to almost the tick to the beginning of it. And this area here, as you can see, very low volume. This is a rejected area, and this is where we found buyers in September. If we breach this 21.1050, you are very, very likely to see cascading stops pushing the market right through. We're likely to see some heavy, heavy volume come in and push the market down towards 21.05. I would not fade or buy into the drop here this morning if it does happen. But the primary hypothesis this morning, as we open, is to attempt to continue the move down and then push up and become responsive as we approach the lower end of the composite range for September. I'm looking for responsive, looking for a retest of yesterday's low, a pullback, and then an attempt at the lower point of control at 21.3250. 2132.50. That's the primary hypothesis today. I'm looking for responsive as prices start to move towards the extreme of balance, the lower extreme of balance. Okay. The secondary hypothesis and um, the more opportunity yielding one is to attempt to be responsive immediately, fail, find sellers, and push. In other words, the corrective move overnight starts to fail, push lower, and then trigger these cascading stops into the low volume node, low volume zone on the composite. That is the better opportunity, and then the target there would be the century figure at 2100. Okay, so that's what I'm looking at for today. Again, I want to remind you there's a webinar today at 4:30 Eastern, right after the cash close, 4:30 Eastern. It's going to go over using order flow to try to pinpoint entries. I'll go over how I go from the bigger picture to looking for areas to lean against and to trigger. I think you'll find it interesting. It will be recorded and it will be posted, but do register. Just click on the link in the description on this video and register so we can send you so someone can send you the recording. That's all I had for you today. Thanks for joining, and I'll catch you tomorrow. Take care.